Mic check, mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing. So happy to be here with you all as we get ready for today's live session. There is so much to cover. There is so much to do. I hope that I'm able to keep laser focused here. Important times, and CTM continues burning hot. I want to start off with this. By the way, this we will be covering tomorrow. This morning, Ian going ahead, or yesterday evening, this morning, sharing something that has me really keenly interested. Anytime Ian is adding to the conversation, I'm paying attention. A pioneer, a trailblazer in all of this. The professor, tomorrow we will focus tomorrow's CTM session on that. I want to point out as we get started here today that Ted, I highlighting this comment, right? Ted is saying, I agree, excellent feedback. Your feedback makes me happy as few question the model's performance. This is the CTM meta model. I told Jordan that the model's real test is wave number 2, right? And Ted has been very, very clear and adamant. Look, he doesn't know what's going on. He's trying to figure it all out in real time with the rest of us. This next important test coming up, wave 2, you can see right now this is wave 1 coming out of the mid-cycle low. On a closing basis, Here is wave one. We're looking at wave one of wave two into liftoff, and then that's the parabolic blow-off move as the most likely potential path forward, right? What Ted has been saying at this important juncture here, hey, listen, this is an important test coming up, wave two. We need to see a lot happen to say that this continues to be our base case moving forward. One of the easy things would be the most important trend line in crypto not holding. If we were to see a break of the most important trend line in crypto, at that point, there's a good chance we're taking out the yearly low. At that point, this model is no longer giving us any edge towards the price action into the peak of the cycle. Other things could happen as well. We talked about yesterday, by November, by liftoff point, if we're seeing price not making a new all-time high, that would cause us at the earliest opportunity being the most accurate to say, well, it looks like we're not peaking at the end of the year. But we will continue to talk about all of that. Ted pointing out in various ways, look, what we're trying to do and the whole point of having a model to go off of is at the earliest opportunity, you know when that's no longer correct, and you can make sure that you have the most accurate path going forward from there. All right, so I think we're clear on that. There's a lot to cover. The Twitter firestorm this morning was a really good place to get going. I don't even start over there, but I will start with the Twitter firestorm because it's important just to get our bearings where everyone should be. And we started with the most important, right? The Bitcoin endgame going into the cycle peak. We have completed wave one. We are in wave one correction. We are waiting for the correction of wave one to be over with and the confirmation of wave two to begin, the break of this trend line. This is not the most important trend line in crypto right now. This is still the most important trend line in crypto. It's the breakout of mid-cycle. That, in the past two cycles, that breakout has held. We have not seen a new yearly low. If all this continues, by the way, super healthy, breakout, retest, right? Wave one, we're seeing now the correction. It's a retest of the most important trend line in crypto. We would like to see the resumption into wave two and the confirmation that begins. And then as Ted has pointed out, hey, crucial wave for the model. We will continue to track that. So we're making sure everyone has the most important bearings of where we are. We're showing in the near term, we're coming up to a place of confluence of resistance. It's a really big test for the bulls. In the past, I have told you, hey, listen, this is a big test for the bears. As we broke out of the descending wedge and into the most important trend line in crypto, right? On the second touch, I said, this one is for if the bears don't hold here, they've lost the bearish case for Bitcoin, right? This one is for the bulls. This is, by the way, a break of this trend line is now seeing the confirmation wave two have started. That's the diagonal downward sloping trend line. You can see from Brad's beautiful artwork, it's a confluence of resistance coming in right where my mouse is right over here. This was the long support, the channel that held for so long. Before it broke down, we alerted everyone. And then we have that lighter resistance here in white, but it's also an area that we need to get above. And that's what we're working towards. That's what we're working towards right now. We'll come back to that. Jesse has actually gone ahead and tightened that up a little bit. We'll look at that. We already shared this together. Base case, a successful test. Most important trend line in crypto being tested. By the way, this is on log. We have to look at it as linear as well, right? A linear retest of the most important trend line in crypto at this point would be almost a test of the yearly low around $28,500. This base case is that this is going to be a successful retest and then a resumption off. And that's going to take us to taking out and or testing the all-time high by the end of October. Now, there are wild cards, and that continues to be the situation with Evergrande, the real estate company over in China, and what type of systematic risk that might pose or may not. You all know we've been covering that from its origins. I'm not sure. My gut tells me it's not gonna pose any type of systematic risk. That doesn't mean that's correct. Things continue to unfold. We're getting towards the end of the week. Markets are closed on the weekend. We will be watching with great interest as that situation continues to develop. That's the biggest risk in the markets right now. Yesterday, Powell came in. We'll talk about that in a second. Before we get into Bitcoin, we're going to talk about the markets. Just want to make sure that everyone is up. There it is. We'll get into this one second because I have it here, Jesse. Let's keep moving forward. And this is Ted just showing, all right, wave one completed, now wave two. It's a big deal here for the model to give us that type of situational awareness that we continue to be on time for what our expectations are. We'll continue monitoring that together. All right, I wanted to share with you before we even got, here it is on linear. Before I do that, and I know that we're talking about Bitcoin instead of the traditional market, but we will get into that because it's so important and it's so connected. Got to focus on the technicals, got to be aware of the macros, got to make sure to continue to gameplay it out, to be on the right side across all markets. We're looking over here. Listen, we don't know that this is the bottom, and this will be the beginning of wave two, the very bottom of wave two, if that is. We've seen on the 2-hour time frame a black diamond, aggressive, expert only, repair in place. It's just the first sign. It might be the best entry as far as into wave two, but the next bit of like, all right, this is a better, safer entry. Once that trend line breaks here to the upside, good chance that we're seeing the beginning of wave two, and then it's the confirmation above this line over there. That's the bullish case for Bitcoin. The bearish case for Bitcoin is that things could potentially unravel out there. We're looking at the equity markets. We see the NASDAQ up about 1% today, S&P up 1.3%, and we'll talk about the 10-year in a moment, and the dollar off. So all of those are pointing to like things are okay out there in the markets. Again, let's see what happens and continue to monitor the greatest risk to the markets right now. That's that continuing situation developing in China. My gut tells me we're going to be fine, but I don't trust that. And I'm always watching and making sure we got everything covered from all angles. If we take out this low from the 22nd of September, by the way, it just happened to be the autumn equinox. William W.D. Gann, right? You're all familiar with the great Gann. He has said that it happens historically. The 22nd happens to be a turn in markets. We'll see if that happens again. The FOMC was meeting that day. That's what made it so pivotal. It had nothing to do with autumn, but the fact that, Jerome and company were meeting, and we'll get to what they talked about in a second, but we're following the market's reaction. So far, the market is reacting as if what is going to happen, a taper or more QE. Think about that for a second. If we break down over here, though, between yesterday's low, at that point, things are unraveling, and we probably will see a test on the linear of the most important trend line in crypto. That coincides with the yearly low. That would be a make or break test for what happens from now and to the rest of the year. If we break down here, we're not peaking by the end of December. All right. That would be one of the ways that the model has shown at the earliest possibility something's not right, something's wrong. Now, being that the most important trend line in crypto has broken to the upside, the odds of that happening are low. They are very low, but we are dealing with some moving pieces, including what could potentially be a much bigger problem. People wonder, how could a $314 billion company going under present such a problem? Is because all in this debt-based system, all they're doing is basically taking on the same risk from multiple different angles. So it's not really $300 billion. It's actually massively more because everyone is sharing the same risk. And not only that, everyone continues taking out basically bets on that same risk, assuming that it was AAA and not going to default. It could get unruly. It's a wild card we need to watch out for. We will do it. Jesse going ahead and showing, look, here's wave one. Here's the peak of wave one. We're into correction. Here's the trend line. The confirmation, affirmation that wave two has begun. It might not be the lowest point of wave two, but it's the first confirmation wave two has begun. At that point, there's a strong possibility that the bottom of wave one is the low. Jesse taking a step further, showing the RSI, the trend line, the break above it. Price obviously bullish as wave two begins. And then he adds over here a daily close above some horizontal support around 48,300. Above it, ultra bullish. And not only that, we've pointed out here as well, above the peak of wave one, no difference in my view, in my mind, between that horizontal line. But, if we break that, it's leading to a break of this. Most likely, if you break the trend line confirming wave two, we're going to take out the peak of wave one. As in the past, when we've taken out the peak of wave one, we have not, until cycle peak, right? We have not made a lower low than that. That's some situational awareness. everyone should be aware of so that they're prepared at the right time to make decisions and there's no FOMO or poor decisions made later. Just a reminder for me to get back to the traditional markets over here. And you're looking at here right now, the basically QE, the expansion of the Fed's balance sheet taking place. Wow, we are already, is this real? No. I don't know what, I'm so sorry. I had this wrong. I don't mean to do that. So I'm gonna abandon. I don't want to talk about, because the Fed's balance sheet's not $8.2 trillion, is it? Could someone let me know in the comments? The last I remember was back into March with the 4.1 expansion of the Fed's balance sheet. That was in March of 2020. We've only added $1.4 trillion a year and a half later. So, talk about $2 trillion. Anyway, I'll come back to that. I'm not sure I'm not exactly sure, so I don't want to talk about it. The 10-year working its way. It is, Michael. Oh, it's hot. All right, Michael, could you can't post a link to my tweet. I didn't read the paper because I don't have the PDF. Yeah, I've read the tweet only, Michael. I've read the tweet. I've retweeted the tweet. I've made sure as many people as possible have had the opportunity to get to understand the importance of that. I feel a little bit like deer in headlights looking at this number right now, and appropriately so. $8.4 trillion. All right. So, excuse me while I take that in for a second. The 10-year, is it rising because it thinks that the market is going to be, that the Fed is going to be raising rates in 2022? Or is this rising because of inflation? Where's the inflation coming from? Listen, I don't have the answer to that, but I do believe that if we break this line over here, and I pointed this out and talked about this as being the most important trend line in the 10-year, and then trying to get really intricate with all of you as this happened in real time, showing the earliest line of repair. This was then the green line. We're above it. We've retested it, and we're working towards the most important line in the 10-year. If this breaks to the upside towards the end of the year, I believe this will provide rocket fuel to Bitcoin. If it is happening, listen, if the Fed is looking to perhaps raise rates in 2020, I really don't see the 10-year yield rising too rapidly. But if it starts pricing in inflationary pressures and the fact of what I think happened yesterday, that the market is pricing in actually more QE, Michael has done a phenomenal job laying it out for everyone to best read what the continued pace of the Fed's expansion of the balance sheet is. We all believe, by the way, even if they pull back slightly, then their response is going to have to be to add a lot more, right? And Raul has shared and picked up on that. And he's talked about why he believes by the end of this year. Listen, don't hold him to it. It's very difficult to get those things timed exactly right, especially when you're doing it 4 or 5 months in advance. But we've gotten it very, very well. Since that June meeting when everyone was talking or looking for the Fed to set up the taper, right, into September's meeting today, we said, no, they're going to be dovish, more dovish than the market expected. That has continued through Jackson Hole and then again through yesterday. Even though yesterday the Fed said that they plan on ending taper in 2022 and raising rates in 2022, they have yet to begin the taper. You cannot talk about ending the taper or when you're going to end it if you haven't begun it. It is possible the November meeting now sets up a timeline of when that taper begins. But up until this moment, all they've done is kick the can back 2 months. They just bought themselves more time. The market, I believe, is seeing what we've been seeing, and that the response is going to be additional QE. And Michael also highlighting not only that, but the trajectory and the continued purchases and what it means here. This stuff adds up, and it adds up quickly. It grows exponentially. It is very difficult for myself, for humans, for all of you to be able to process exponential growth. Don't think that you have it covered. All right. So anyway, if this is rising and this starts rising because of inflation, that is going to provide rocket fuel over here, I do believe. Let's keep going. The 3 takeaways from the Fed meeting, I shared them with you. I didn't read this article. I'm not concerned about it. I kind of go with those who have been more correct. That's us right here. I'm not interested to see what the takeaways from the people that got it wrong. But, again, their Fed is looking to begin to end tapering in 2022. Everyone I saw right away understood, wait, what? You haven't even begun it yet. Well, how are you talking about ending it? And if your timeline for beginning it has been so off, what makes us believe that your timeline for ending it is going to be right? The reason that they talk about raising rates after tapering is because the rate hike is more effective if you're first able to take away some of that extra QE purchases. It's the same way before starting QE, they race the rates down to zero. It's more effective, the stimulus, if rates are at zero. So that's why they're first looking to taper before they try to hike rates. We all know how that ends, though, or the fact that they can't do it. Before we get into Bitcoin, I do want to talk about, Mike, I'm sorry, I'm going to highlight that comment so I could read it afterwards. I just want to keep going over here. Vakanet, do you remember early on, this is going back, I think 4 months ago, JP Morgan talked about this abnormal job growth that we expected to have into the end of 2021. I said, hey, listen, first of all, who's the source that's telling you this? What are their intentions? And then the second, I said, well, we'll watch it. I don't think that's going to happen. We'll watch it. The jobs are not coming back. The Fed used to say and highlight, Jerome, that, listen, they need to see job growth return before they start being less accommodative. We were like, that's never going to happen. The jobs are never going to return because of all the government aid and stimulus. Where we go, they're not really focused in on that. What they've been focused in on is that verbal intervention that they're getting ready to taper. And it served this purpose. And all that did, I believe, was help them extend this cycle out further. Remember, they're trying to make it to 2022, 2023 in order to introduce the digital dollar. Perfect lead-in over here. This is Luke, aka Lukastos, and he's pointing out, hey, listen, by the way, there's a lot of things going on over here, right? First thing, CTM strong, pointing out the long channel we're in, right? The breakout of the channel. This is S&P 500. We often watch and talk about when you have an upward sloping channel. By the way, Bitcoin is in a rising upward sloping channel for the last 9 years. When these things break out to the upside, that usually leads to a big emotional mania parabolic move. That usually is the end of the move. If you're watching this happening on a smaller time frame, like the 8-hour, and you see a channel that happens to be for a few or several months, that breakout to the upside is going to be, it's still going to be parabolic, but on a much lesser scale. This channel over here is going back to the last crisis, 2008, and the QE starting out of it. And you can see we've now broken out to the top. And he's saying, he's not predicting, he's just watching. And if this does end to that familiar pattern that we're end with, and we wind up seeing a big correction as the Fed begins tapering, right? This could perhaps, and he takes it a step further right over here. Let me make sure that this could perhaps, like the red part over here, it could be leading to a stock market crash. By the way, if you remember here on CTM, back during the height of the crisis, do you all remember? If you were here, please let me know in the comments. We said, listen, everyone was worried about when the next crisis was coming. And we were like, listen, it's been a long time since the last one. It was 12 years. 2008 was the last crisis. This is 2020. I think they're going to be able, with the response, right? The response was not only the $4.1 trillion expansion of the Fed's balance sheet, it's been the continued QE purchases, roughly $120 billion monthly. I'm sure that's not accurate, but it's roughly $1.4 trillion a year. That has continued. I believe that they're going to be able to prevent another crisis. By the way, do you remember U.S. Treasury Secretary Janet Yellen told us there will never be another crisis in our lifetime? And when she said that, we said absolutely untrue. There's no way, right? She has since been proven wrong about that. We have been proven right. What I do believe they're trying to do is just keep the music playing until they're able to introduce the digital dollar. We also said we believe they will potentially orchestrate a crisis. To orchestrate a crisis, all the central bankers have to do is tighten the supply, right? That comes from raising rates. It also today includes from taking away that extra liquidity, that extra QE purchases, the extra purchases of monthly securities. Take that liquidity away from the market, and they could orchestrate a crash. If they orchestrate a crash, what are they able to do? They're able to step in and provide the solution. The solution is going to be, here's the digital dollar, right? By the way, one of the potential greatest attack points for Bitcoin, that would be the point when the US government really comes strongly against Bitcoin, if they have any intention or plans to do so. The honey badger will win. Nevertheless, that could get a little fuzzy. So that's really strong stuff over there shared by Luke, because definitely visualizing something that helping us visualize something we've been talking about again as early as possible. It's hard to get things like perfectly right or accurately right. We're in the ballpark and we continue to sharpen our views all the time. So where are we? And let's keep going over here, making sure that everyone has the awareness they need to keep going. I forgot to tag Miles in this post yesterday. This was a post about how the 4-year cycle continues to track as the most likely path towards peak and the quickest way to know when something is different. And Miles definitely should have been tagged on this. This is a chart of Miles' overall view, everything that he's put together and learned at CTM. Miles is watching on the replay today. On Monday, he'll jump on the CTM only live stream, and he will, with me together, discuss the work that he's sharing here and presenting. A couple of things that I do want to point out. I was looking at it before going live earlier today, and we got a big shout out to Ms. Config over here, pointing out the 1.618 golden ratio here on mid-cycle on Bitcoin. And then everything else we're looking at seems to be all the work that we've really done and put together on CTM. We don't have pointing out from the halving to the low of the mid-cycle, right? That was something that we did here, showing, hey, listen, we are outperforming 2017. No, I know a lot of people, they look around and they look at the cycle and they're like, diminishing returns and this cycle's outperforming. And then we showed in many different ways in lining it up how that really here's another way of doing it. And it's measuring from the halving event up until the mid-cycle low. You could see that this cycle outperforming the last. Miles, you do have to make an edit in here. If Misconfig gets credit, then for sure, so does JCL over here. And we've also shown, right, the mid-cycle has been an exact average of the previous two mid-cycles in drawdown, right? By the way, this cycle was not showing that volatility to the downside. It was only showing increased volatility to the upside. It wasn't into the mid-cycle shakeout that we did see the volatility on the downside then become an average. We've also since seen the volatility be an average here as far as consolidation sideways mid-cycle from the previous two cycles. And we continue to look for price to make that new all-time high somewhere before the end of October, saying, okay, even in the amount of time it took to make the new all-time high continues to be an average. Miles is going to get into it with us. Really looking forward for that share as well over here. Articulating, you all remember, right? You all remember we've shared it so much, the 1, 2, 3, 4 step over here. Before exiting the public, we made sure at the beginning of each live stream to put in that special video showing the best way to invest in Bitcoin, the foundational strategy that everyone should be employing. By the way, we looked at that as using a 70% annual compounded return on Bitcoin. I do believe that with our CTM awareness that we're able to make moves throughout that 4-year cycle that will substantially increase that return. I saw Bitcoin Tina talking with Bitcoin Magazine. Bitcoin Tina, who, by the way, 4 years ago was considered like, oh my goodness, Bitcoin Tina is so bullish, it's ridiculous. He's now saying, right, and I think just to put it out there and be correct, like, listen, for sure, I believe within the next 10 years that Bitcoin is going to not only match the market cap of gold, which would mean Bitcoin currently, between $400,000 and $500,000, but probably overtake it. And if he says with his math, I'm not sure what it is, that if you look at Bitcoin becoming a $400,000 or $500,000 asset, overtaking the market cap of gold, that would be a 40% annual compounded growth rate. So again, we're looking for that obviously to happen next cycle, right? 4 years from now, we believe that occurs. That's a situational awareness point that we've given out for the longest time frame. Miles showing and articulating the 4-step that we look in. Oh, in that video that lays that out at the bottom, we do talk about what's happening this cycle. We do talk about how, like, hey, listen, so far, measuring from the halving event to the mid-cycle low, this has been an average of the two. We had from this point in the first cycle an 11x. We had in the 2016 cycle a 7x from this point. What do you think is going to happen? Are we going to have a 7x continuing to match this current cycle's performance? Or do you think it might continue to be an average of the two and then pointing out the 1, 2, 3, 4, the 5-step into the final peak over there? What else? Where do we want to start? This is an important one over here. All right, let's move back over here to this. And what I'm looking for, I've pointed out often when the rational root points out the angle of this current bull market, how that happens to be steeper, right, than the 2017. I'm looking for any indication that we're looking at a steeper angle over here as well. That's not in here. This post over here by Tech Dev, constantly putting out strong work, good understanding of the 4-year cycle and everything that we're doing here. And he's pointing out that, this to me, when I look at this would say, oh, maybe we're not looking at increasing returns this cycle, right? Looking at the angle coming off of the final impulse, saying that it is 5 degrees less steeper this time than it was last time. It's something I want to look into more. Maybe we should have Tech Dev talk about it himself with us. Something I'm going to come back to. I just want to let you know, I'm going to come back to this. I want to make sure at all times that I'm always constantly pushing around the bubble that I live in and making sure it's the bubble I want to be in. If I see as quick and as early as possible, something needs to be adjusted, definitely going to adjust that. I have to share this with you. This is Benjamin. By the way, we're looking to get Benjamin on for a CTM only live stream. He said that he would be happy to do that. I want to play this first. I think it's only 1 minute here. It might even be 20 seconds. And Ben absolutely crushes it here, right? And he's looking at price using log scale as far as time, and then he's using log scale for price. And when he does that, and then he looks at it, he's like, well, it looks like price is just rising due to the S-curve. Exactly what we've worked out over here, what we've talked about. Let's look at this. Let's listen to this here.
Just saying, because it seems like it pretty much just moves up this curve, let's keep jumping in here. So basically, I'm just going to.
Once he realized that, he kind of abandoned it. He was like, well, once he realized it, he kind of was like, well, let's just keep moving forward. This is a great video. Let me share the link in over here. Everyone, go ahead and take a look at this one. Good stuff over here. Lots of good stuff shared by Ben on Into the Cryptoverse. I've been looking at this, right? This was, I've pointed out to everyone that so far the bear market low happened to coincide with, and this actually on Ben's channel, and then before on CTM, that it happens to be when you're looking at, oh, wait a second. That was going to say Miles. This also, we got lots of credit here, misconfig _exe. But that was here on CTM that we pointed this out to everyone, that it is the mid-cycle high, right? And then you carry that over. That winds up being the coming bear market low. If that happens, by the way, Miles pointing out, we're potentially looking at something like $450,000 for a cycle peak. I can't wait to get Brad on to help us look at what some bullish models look like. I think that here on CTM, I think because of what we do here in the public nature, we're trying to remain conservative. I know too many our price targets don't seem conservative. But anyway, let's keep going. Where are we going to? So the reason I was pointing that out is this. This is something when misconfig trying to set up an appointment, I would like to see his thoughts on this, have him work out the math. Jared is sharing if Bitcoin reaches $300,000 this cycle and the golden ratio continues to play out next cycle, that means that the mid-cycle retest in about 4 years will be $485,000. I mean, I want to, again, the same way with the Fed's balance sheet. I don't want to if I look at it, I get a little deer in headlights. And I try to do that with the price of Bitcoin too, for sure, right? But let's take a look at that. I would like to know, I do think that would be overtaking the market cap of gold. I believe that we overtake the market cap of gold, and I believe we do that mid-cycle. We've been saying that from the very beginning as well. These numbers putting out seem to coincide with those awareness points. So I would like to tighten that up and get a little detailed and accurate. If we could all do that together, that would be a lot of fun. Let's move down to where we are right now. Miles was very quick, by the way, pointing out that he didn't believe that we began wave 2 somewhere around October 4th as a situational awareness point. It was weeks earlier that he did this. It was a week earlier that he did this, right? Note that 2021, wave 1 has started to correct underneath. This is great. Hold on. This is a great situational awareness point. He's pointing out in this current cycle that we have started to correct underneath the all-time high. 4 years earlier in 2017, wave 1 peaked above the all-time high. Now, go back again 8 years earlier, and wave 1 over here in 2016 peaked below the all-time high as well. Again, we'll get into that together tomorrow. We'll be looking in on that. But that's a very important awareness to put out. Watch for wave 2 to end with a retest of the all-time high. There you go, right there. That's where I'm at as 2. Whether or not it breaks to the new all-time high or tests the new all-time high, what we are looking for is for wave 2 to test that all-time high. And that's going to be a very strong situational awareness point for us all. No, I don't want to go here yet. Okay, this is awesome, and this is amazing. This is what I want to focus on this morning. I feel like we are making a new turn here in the evolution of CTM, and it is a fantastic one. Again, beginning with that grinding it out, sharing that vision, CTM hive mind coming like in there, and then like we do have like the pioneers, like the professor, right? And now I feel like CTM is so strong. It's like this giant amber fire. I am so honored and so grateful that, the battle has not yet begun. And when the battle begins, we talked about early in this episode what a potential battle might be. That would be the launch of the digital dollar, and if they decide to come against Bitcoin at that particular time, right? If when the battle happens, I'm so glad, so blessed to be standing shoulder to shoulder with all of you. Now we have, some really amazing work being done. CTM, Jesse, someone doesn't want to be standing here with us. That's all fine. We're like, listen, many are called, few are chosen. I don't care. I really don't care. Listen, every one of you are important to me if you make the choice. Otherwise, whatever. So anyway, but that's a big heart. I love you. I really do. I love you, and I hope for the best for you. So I don't want to get into. I like that you are Miles. I like Jesse always being so sharp and running. I'm gonna wait until we come into the confirmation of wave 2, and then I'll come back to this, looking at what we're looking for to occur in wave 2. I just want the confirmation that wave 2 has begun to first be in play before I continue moving out forward. I love that we now have all of this, like, I don't even know what the word for it. If anyone has the word, put it in the comments. But I love that we have this ability to be covering in such detail all the important areas with that hive mind working. And then now, like, as we're evolving, I could then focus in on all of your work here as we continue to put together. Let's take it forward, right? I think I wanted to look at this. Anyway, I'll come back to that because I don't have it with me right now. What else I wanted to look at is here. Boom. CTM as early as can be before anyone on this. Why does everyone care so much about the Fed's taper? Simple. It's all that matters. It's the only thing. We were the quickest to follow what was happening with the central bank's balance sheet, not just the Feds, right? The ECBs and the central banks as a whole. That is what CTM has deemed the greatest signal. We talked about way before it happened that governments would be starting to add massive stimulus. The debt will just keep growing. By the way, if you start reading between headlines, if you're able to read between headlines and you see that now, like, everyone's becoming like, inequality activist and devoting more resources towards climate change. That's all to keep this massive debt bubble, this house of cards flowing. They need tremendous amount of money. It comes from all these different areas. So where I Where are we? Where I'm going to play a little bit of music here. I'm going to play some honeymoon vocals, check in with all of you. I might keep this short so that we could go ahead and prepare for tomorrow's session, highlighting all the stuff that Ian is working on, diving in deeper, what I wanted to share off of this tweet and how that builds off of this tweet right here, right? Preparing that for tomorrow. Let me play some honeymoon, check in with all of you in the comments. I might make this one short here just so I could upload it to the public. It's been a week since we've done that, and I want to make sure that CTM is spreading the love, making sure we keep whoever needs to be with us. All right, so let's start with some honeymoon. Four steps to glory. I love it. There you go, Tom. Tom, thank you so much. Tom, thank you so much. No. Wow, that's great news. Is Lightning integrated into Twitter? I don't know anything about it. I'd love to read about it. Thank you so much. Monumental jewel. Wow, so glad that you're here with us for sure. All right, lots of good stuff to talk about. Too much, actually. So we'll start wherever we could start. I think that's the word, monumental jewel. That is for sure coined as what the asset of CTM HiveMind is without question. Couple of questions, right? If the SEC approves a Bitcoin ETF, would that make it much less likely that the US that would make it easier for Bitcoin to come against Bitcoin. Having some type of centralized fund, an ETF, right, that is holding all the keys to all that Bitcoin, that actually makes it a little bit easier. Listen, there are giant minds who have worked that out for us. If you're interested in it, we could find out the best resource to share with you. But no, I don't think that's good for Bitcoin, actually. That's why I'm not a fan of the ETF. Whatever's going to happen, so be it. That's how I feel about with every single project out there. I'm a fan of innovation. And if someone's worried about XYZ coin because it's a threat to Bitcoin, well, then Bitcoin isn't Bitcoin. By the way, what I did perceive to be the greatest threat ever to come upon us as a threat to Bitcoin, that was that video we watched when Elon Musk is like, hey, listen, I personally own Bitcoin. my company, my largest holding, Tesla, the public company, holds Bitcoin. And then my second largest holding is a private company called SpaceX, and they also hold Bitcoin on their balance sheet. And then he talks about why the potential may exist because of things that he's personally building with that private company, SpaceX and Starlink, that in the future, there will possibly be the technology will exist to create a better Bitcoin, something that might even be 10x better. That is a potential threat to Bitcoin. Now, Adam Back has gone ahead, or it might not have been Adam Back. It might have been, I forget the name, Nick Zabos. One of them did say that, listen, at that particular time, we'd be able to basically take a look at all the TXOs on Bitcoin and migrate to whatever this better technology was. You know, there is something about the launch of Bitcoin being so pure that makes it almost irreplaceable in many senses. I can't share the news with you right now, whether or not tipping function has been added to Twitter. I haven't seen anything about that. Someone mentioning during the live stream that the Lightning Network has basically been integrated into Twitter. That is, so we'll see what happens after that. I love Jesse. Also, this is coined forever, the 4-step to glory. Best ever. Let's see what else. Dave, this is building off, I believe, what we were looking at with Luke, aka Lukastos. Beautiful illustration of what could potentially be occurring in the equity markets. And he's saying we'd be able to position into BTM at the bear market low, right? If the digital dollar starts in 2022, 2023, so we can manage risk and hold it like honey badgers. 100%. I think people here in CTM will actually will do really well during the bear market. And I think that they'll do better, not only from exiting the top, whenever that is, of the bull market cycle. We'll build off that in 1 second, but throughout that bear market, be able to continue that goal of accumulating more Bitcoin and then being in the greatest position of power coming off that bear market low. Look, something here that's important. It was Vakanet who said it. He mentioned 2030. Luke, I think that this needs to kind of be thought about also when we talk about and we share the potential path forward. Listen, we want to try to be as accurate as possible, as early as possible. It's hard to predict things, months in advance. There's no question about that. Forget years. But, I think it's a good reference. The digital dollar and the introduction of the CBDCs is just the next step in their diabolical plan. The 2030 is that really to have, that's when everything converges. We need to be watching that as a critically important juncture point, right? That move into 2030. All right. So that's important when we start talking about these things and remember them. This is what Michael, CTM will have the best set of scenarios since back in May, we said, this is not a V, this is not sharp, something's wrong here. Let's get a side, let's get neutral, let's wait for further clarity. There is no clarity until the most important trend line in crypto breaks. From the very beginning, as early as possible, saying things are not clear, here's the earliest opportunity for things to become clear again, right? And at that particular time, CTM modeling crew, at that point, Ted and Ian going ahead and working on what variations would look like for a lengthening cycle, right? They're like, Jordan, we got this. We're going to be on it. And since then, whether it's amazing, beautiful work done by Michael and or like the Hive Mind working out potentially what could be cases for a lengthening cycle, a lengthening bull market, I should say, and what that would look like. And if at any point in time that becomes here the base case, that's what we will lean into, and we'll do it with the best accuracy we can have. But right now, this remains the most likely path. What are we lining things up here right now, by the way? Let me take a quick look just so I could make sure we get that right. And right here, we're lining up mid-cycle, right? Scale to mid-cycle. I also like lining this up here from the halving as well. But you could see lining, so the mid-cycle low, that might be, let's not do that. Let me line this up from the halving. If we line this up from the mid-cycle low, by the way, some people get confused and they think that we're lining this up from liftoff because the price action from the mid-cycle low into cycle peak shows such symmetry in these prior two cycles. Will that happen again? Obviously, we don't know. We're watching and waiting, right? Let's see. I want to pull this up. Cycle date aligned to the halving. All right. There we go. Now, when I look at this, all right, and always even starting and looking at the halving tracker is when I first visualize this in my mind, right? I could very well see wave 1, wave 2 into liftoff and cycle peak. Is this lengthening cycles? In my mind, this is absolutely not lengthening cycles. Why do I say that? Listen, lengthening cycles, you had an 85-day deviation from cycle peak in 2013 to 2017. That, taking that forward, if there's any 85-day deviation, either which way, I would consider that well within scale. To think that things are going to take place exactly to the day and try to time it like that, that's not really not how it works. Anyway, I don't know where I was going or why we're ending it like this, but it is what it is. I want to take a look and see if there's anything else I missed before we get off over here today. And so to do that, I need to play a little bit more of these tunes here. Matt, that could be a potential big surprise to the upside if we find out that new companies have added Bitcoin to their balance sheets. That's a great awareness point. The hardest, Jim. The hardest, Jim. Jim, thank you so much. Talk about CTM strong, CTM for so long. Jim, thanks so much for all you do to add to this community to keep CTM. Listen, there's so much that happens on CTM that people have no idea. And there's like people working out variances for all critically important, let's say, aspects of not only our life, but our future and our fight here for freedom and liberty and the pursuit of happiness. I just want to thank each and every one of you. And listen, all you have is my passion, my love to keep on making sure that we stay laser focused on the most important thing that matters. And that's what we do here together. So Alan, Al, thank you. So CTM strong. Thank you so much for everything you do here for all of us, all of you, right? Have a beautiful day. Tomorrow's a really fun session. I'm going to be preparing for it now. I'm really looking forward to sharing the work of the professor, Ian. Lots of love to family, Randall. Lots of love to you all. Have a beautiful day, everybody. And I will talk to you tomorrow. Look, if that happened, let me go. If I don't know personally, Al and Al would be my go-to point of reference. I would first look for it to see if anyone knows that. I would also look at the work that TechDev has shared, showing a 10-year cycle of gold, comparing that to Bitcoin's current cycle. And you see that Bitcoin currently became a $1.2 trillion mid-cycle here as gold became a $1.2 trillion asset until it become a $5 trillion asset when you could see that similar price action. It continues to play out. It's something to watch for sure, any type of similarities like that. But as far as there would be a lot of money would come out of gold ETFs and flow into Bitcoin ETFs. A lot of money right now there are people around the world who are not able even to get into GBTC because of whatever jurisdictions they're in. They have limitations. And the only way that, they have money in gold ETFs. And if there was a Bitcoin ETF available inside the US, and then these people would have that opportunity, you would see a lot of money flow into there, and it would be coming from gold. So that would kind of accelerate the movement, the price ratio between gold and Bitcoin for that particular moment. All right, everyone, have a beautiful day. and I'll talk to you soon.